Welcome back. Crypto has recovered nicely over the past few days, but Bitcoin is now sitting right at crucial levels. And while risk markets are extremely positive, one thing is still missing in crypto, real follow through. So the big question is, could we actually see Bitcoin at 50K again? And so today I'll show you a chart that suggests it's absolutely possible. So let's dive in. I always hear that the equity markets are not supported by breadth. It's just a few stocks. So I thought we start this week's stock market overview with equal weighted indexes, products, meaning every stock in the product has the same weight. Now, as you can see here, the equal weight S&P 500 near at all-time highs. The same for the Nasdaq, equal weighted, also near all-time highs. Yeah, that doesn't look bearish to me. So and the same for if you exclude the Max 7 from the S&P. Yeah, so you hear this endlessly in the media, on X. It's just a few stocks. But as you can see here, the charts speak a different language. And that's overall a bullish market. Also, small cap stocks again, up over the week, very strongly at all-time highs. So finally, a rotation from the large caps to the small caps. And so at the same time, you have high beta stocks. That's the ratio of high beta stocks to low volatility stocks. Also, high beta outperforming close to all-time highs. High beta stocks here, largest sector is tech, followed by consumer discretionary. So you see, no matter where you look at, we are at or near all-time highs. So that's not a bearish market. Same for Tesla. I picked the stock because I also hear that endlessly the end of Tesla and why you should be shorting the stock. I think if you look at the longer term chart here, that's a bullish pattern. And also, again, near breakout levels at the all-time high. So no need to worry about risk markets. And so also you see a rotation within precious metals to higher beta allocations. Yeah, this is the silver gold ratio. And you see that silver is outperforming gold, which is also a sign of a late stage cycle, yes, but it's the higher beta asset in precious metals, and so also a bullish sign. The dollar is still weakening. It was good that we didn't get over the 100 level. It's now going down again, and of course, this helps overall risk markets. And I expect this momentum still going down. Let's see. I mean, we come to rates in a second, but at least this was so far a bullish support for risk markets. And also, I think a longer term thing is also the rotation from US stocks to international stocks. Here you have the emerging markets against SPY, against S&P 500. And you see this huge downtrend since multiple years, over a decade. And now you can see signs of a bottoming. And I think that the next few years are maybe more tilted towards emerging markets, but also international stocks. I don't have the chart here, but international stocks against SPY looks pretty similar. And also you see that if you look at growth versus value, that we also see a rotation into value stocks very recently, right? So while tech is not going down, you see signs of overperformance now in other sectors and value stocks, commodity-related stocks, small caps, which is the lifeblood of a bull market, right? Sector rotation is the lifeblood of a bull market. Now, here is an interesting phenomenon. This is the 30-year yield, and what you see here is a inverse head and shoulder. So it seems, despite the bullish talk of Fed cutting, despite Hassett being discussed as the new Fed chair, which is pretty dovish, should be dovish, rates are not going down a lot. Now, I get it. The Fed is more powerful on the short end, but the longer end at least doesn't seem to react. And this could be either growth related, or it's really the very also about this super indebtedness we see, but not only in the US, it's also a global phenomenon, right? This is a very nice chart where you see the different curves and short-term yields, and you see that red line is basically the longer-term yield level, and so 10-year, 20-year forward, and you see that the longer end, no matter at which country you're looking at, is going up, with the exception of Switzerland, maybe. So you see this bear steepening here, and as you see here in this tweet, Fed rate cuts have driven short-term yields down, but long-term yields haven't fallen. So this is a sign of bond vigilantes, and that can maybe be a headwind for next year, right? Maybe the Fed can't cut because we have more inflation going on, and maybe that's also a sign why the 30-year US yield is not topping out, but rather bottoming at the moment. So that's something I think more a topic of next year, but we have to watch that. Now, let's go to crypto. And I posted this chart also on LinkedIn with a lot of excitement and feedback from the community. So what I did here is, that's the Bitcoin chart, and I just used this fractal here from end of 21, 22, and just extended the current chart with that fractal. Interestingly, two things. So one, it fits a classic head and shoulder pattern, which is interesting. And the second thing is that this 50K level, or 45 to 50K level, also coincides with the projection line from the head and shoulders pattern. Yeah. So it's just a thought experiment. It's not that this is my base case, but I always like to compare things with the past. And so, and you also see that would be ending September, October 26, and with a top in January 26, which maybe goes hand in hand with what I said, with maybe the Fed cutting rates, maybe with inflation going up again, and maybe a weaker equity market. But regardless, even if that's not my base case, people should think about it. What could happen? what could be a likely path, and if you're positioned accordingly. And if this chart is causing some bad emotions, then that's probably a sign that you didn't do your risk management. But it's definitely an interesting hypothesis and one I'm also currently observing. What I don't like at the moment with the rebound in Bitcoin we saw last week is that, and that was my hope, is that the altcoin market is relatively speaking underperforming, right? So if that was a high beta rally, a broad rally, we would see more life in altcoins, but we don't. And that's not an encouraging sign. And so also, if you look over the last 1 year, what performed in crypto, surprisingly, it was just the centralized exchanges, right? The centralized exchange token, the BNB token, the OKX token, and so forth. And anything else is in a bear market, right? People are still talking about a bull market, but I think we just have to be open. And 2025 wasn't a good year. And you see that Bitcoin is down -7%, which is okay, you can handle that. But again, if I look at the typical altcoin performance measured by our top 100 equal weight, that's down 65%. That's not nice. So you can say crypto overall is already in a bear market. What is interesting is that from a chart perspective, digital asset equities, the Bitcoin miners, Coinbase, the galaxies, right? These crypto stocks are doing relatively better, and really the support level here was important. So we respected that and are now going up again. Speaks also for this maybe weakness in token, because a lot of people were buying AI stocks, but also crypto stocks, which were the Bitcoin miners, for example, are also an AI related theme. I'd like to end with heat index again. So it's still at extreme undervalued levels. There was no buy signal yet. For this to happen, we either need a more brutal sell-off or an increase in breadth and relative strength versus Bitcoin. And Bitcoin going up without the heat index going up is a bad sign overall for the health of the crypto market. So that's a key point here. So overall, we have to be cautious, and we have to watch also the rate levels for a sign what could be the topic of next year. So that's it in a nutshell. As always, smash the like button, subscribe to the channel, and see you next week. Thank you very much.